Snapchat just reported earnings for the second quarter of 2022, and let's just say the stock market was not happy with Snap's earnings report. Snap stock is down around 25% in after hours after there were some warnings about Snapchat's business, with the company saying in its comments that, quote, "The second quarter of 2022 proved more challenging than we expected," end quote. Snap also declined to provide any revenue guidance at all for the third quarter, saying in their investor letter, quote, "Thus far in Q3, revenue is approximately flat on a year-over-year basis. Forward-looking visibility remains incredibly challenging, and it is unclear how the headwinds we observed in Q2 will evolve as we move through Q3. Given this, we do not intend to provide financial guidance for Q3. That said, it is clear that our rate of revenue growth has slowed considerably, and we must adapt our investment strategy," end quote. Many investors are wondering if Snapchat's earnings guidance is a bad sign for other social media stocks that have earnings reports of their own coming up very soon. To answer that question, let's dive more into what Snapchat pointed to specifically as the headwinds it's facing with its business. The first culprit Snapchat pointed to for its disappointing earnings guidance is that platform policy changes have disrupted its advertising business. This is in large part a reference to the Apple iOS privacy changes that happened last year that limited the ability of social media companies like Snap to target and measure ads to users. This blow to ad targeting and being able to measure advertising effectiveness has caused some advertisers to divert ad spend from platforms like Snapchat, since now the advertising is less effective, since the ads cannot be curated to who their ideal target customer is, and it's no longer as easy to measure how well the ads are even performing for the business, making Snap's advertising business less desirable for marketers and weighing on the company's revenue. This transitions into a second point that Snapchat called out as a headwind for their earnings going forward, which is the increased competition that the company is facing. These iOS privacy changes by Apple weren't purely meant for the benefit of Apple users' privacy. They also benefit Apple substantially because they've been fueling Apple's own advertising growth. Apple offers advertising space for developers to promote their apps in their App Store. A Reuters article talked to the chief operating officer of a large mobile app marketing agency who said that, quote, "We've seen dramatic increases in budgets on Apple search ads following the privacy changes," end quote. The agency's clients are now spending around 2 to 3 times more on Apple ads, largely because the effectiveness of ads on other platforms has been hurt by Apple's privacy changes. The same article says that Barclays notes that Apple's advertising business is expected to grow 36% this year alone. In addition, growing competition is mounting from TikTok as well, and the combination of increased competition from Apple and TikTok is expected to capture 34% of every new ad dollar outside of China this year, which is huge. This growing competition in the digital marketing space is pressuring Snap's business and their ability to generate revenue, since there are now more platforms that are capturing ad dollars that may have previously gone to Snapchat. The third thing the company pointed to as a headwind for its business was the macroeconomic challenges that have disrupted many of the businesses that advertise with Snapchat. Since many of the companies that advertise with them have businesses that are currently suffering from a slowing and disrupted economy, these companies have less money to spend in their marketing budget on Snap's advertising, and they've been lowering their advertising bids according to Snapchat. This in turn has hurt Snap's earnings and revenue outlook because the economy is tightening. These issues Snap is facing in its earnings are general industry trends, as other companies like Meta, Pinterest, and Twitter all have to deal with the iOS privacy changes limiting their ad targeting. The additional competition from Apple and TikTok in ad budgets are also something that will likely take money away from advertising dollars being devoted to platforms like Facebook, Instagram, Pinterest, and Twitter. And all companies are exposed to changes in the macroeconomic outlook and the possibility of slowing consumer demand. So the headwinds facing Snap's stock also look like they could easily weigh on other stocks like Meta, Pinterest, and Twitter. Because of these problems, Snapchat signaled they are looking to introduce some future business changes to get the company back on track. These include efforts to develop their own data tracking and attribution to try and replace the lost functionality from iOS privacy changes and return these back to marketers to bring them back onto their platform. They are also working on developing new revenue-generating opportunities like augmented reality-focused advertising capabilities that they hope will drive revenue growth. The company also just released Snapchat Plus as a subscription service, which is a way for Snapchat users to access exclusive, experimental, and pre-release features for $3.99 per month, which they hope will increase revenue. But what do you think about the Snapchat earnings warning and them not offering any guidance for the third quarter? Do you think other social media stocks might be in for bad earnings reports this quarter? Let me know what your thoughts are in the comments below, and be sure to subscribe to the channel for more investing and finance content. Thanks.